Welcome back to your go-to source for the latest peek into the financial landscape.
Today we're breaking down essential insights about economic reform and the looming threats to economic stability.
That's right. We'll dive into heated topics such as the future of the Federal Reserve, inflation rates, and the pull of gold against fiat currencies.
And make sure to keep an ear out for our expert guests like David Lin and Gary Wagner as they unravel each topic.
This content is crafted to equip you with valuable strategies in minutes, so let's jump in.
Before we get started, it's important to note that this is educational content and not investment advice.
Stay tuned for the next part, where we will discuss new data suggests oil will hit a price you won't believe, with insights from George Gammon. Could oil really fall below $40 a barrel?
George Gammon believes this scenario isn't just possible, it's supported by some major analysts.
What's the reasoning behind this bold prediction?
Let's break down his insights.
What's the crux of George's argument?
He believes unwinding OPEC's cuts could lead to plummeting prices, especially with lackluster demand.
This could signal a window of opportunity for savvy investors, right?
Precisely. Buying at these low prices could yield significant returns.
What role does OPEC play in this situation?
They could strategically unwind their production cuts, impacting prices.
Isn't the U.S. fracking industry at risk if that happens?
Absolutely, they might struggle to compete at lower price points.
What about the economic situation in China?
George highlights a major drop in their property market affecting overall consumption.
That's alarming. Doesn't it indicate a deeper recession?
Exactly. The ramifications on global oil demand could be severe.
What could this mean moving forward?
If predictions hold true, we could see prices drop to the $30 range, a substantial decrease.
That kind of drop invites serious investment decisions.
For those ready, absolutely. The cyclical nature of oil means a reversion is likely.
So what's the key takeaway?
Those considering investments in oil should closely monitor these developments.
And stay nimble, right?
Exactly. Timing and strategy will be crucial.
Stay tuned for Jeff Snider's hard-hitting analysis on the implications of the dollar's rising strength. What a fascinating look at the dollar's recent rise.
Absolutely. Jeff Snider dives deep into the reasons behind this.
And it's not just about the Fed's actions, right?
Exactly. There's a broader international context to consider.
So what's the crux of Jeff's argument?
He suggests that the dollar's rise reflects intense global dynamics, not just U.S. policies.
Interesting. How does he support that?
By examining risks associated with major currencies through a global lens.
The DXY just hit 107. That's pretty significant.
It sure is. But as Jeff points out, this isn't merely about local developments.
So it's more about international confidence.
Precisely. The dollar acts as the go-to currency in tougher times.
What about the euro and yen? How are they affected?
The euro is facing pressure while the yen is losing ground despite rate hikes.
Is this all about risk perception then?
Bingo! It's a reflection of the risk environment in the euro-dollar framework.
What does Jeff predict about the dollar's future?
He anticipates continued strength due to persistent global risks.
Sounds like a cautious outlook ahead.
Indeed. Investors need to watch the risk landscape closely.
In summary, it's essential to grasp the factors behind the dollar's movement.
Absolutely. Investors must adapt to these global influences.
Where should we look next for insights?
Stay tuned for our upcoming analysis on emerging markets.
If you value these financial insights, subscribe so you won't miss our future updates.
Your support enables us to keep delivering the content you care about.
Recent news has shaken gold prices, so what's really happening?
Gary Wagner suggests fundamental shifts are at play right now.
Exactly. Let's break down his perspective on these movements.
He dives into how Trump's victory has impacted market confidence.
What's the core takeaway from his analysis?
Wagner argues that the market's view of stability under Trump has diminished gold's appeal.
And how has the dollar influenced this?
Well, a stronger dollar has historically put pressure on gold.
The $200 drop after Trump's win is significant.
It really reflects the market's newfound certainty.
What does that say about the election's impact?
Trump's victory led to expectations of stability.
How do interest rates factor into gold pricing?
Wagner notes continuing cuts might support gold prices.
Interesting. So the Fed's decisions are pivotal here.
Absolutely, especially regarding speculative investor behavior.
What does Wagner predict for gold in the coming months?
He anticipates a corrective rally, followed by a bullish trend.
So now's a good time to get in.
If you're long-term, definitely. Accumulation is key.
Could we see gold prices bouncing back soon?
Wagner believes a rebound is likely if key indicators align.
That's quite the optimistic outlook.
Indeed, timing and market fundamentals are critical.
So, how should investors approach the market now?
They need to stay informed on key metrics and adjust accordingly.
Solid advice. Always keep an eye on the fundamentals.
Absolutely, it defines the overall market trajectory.
But there's more to discuss. Up next, Dr. Ron Paul reveals the truths behind U.S. monetary policy on Kitco News. Dr. Paul dives deep into the historical failures of the Federal Reserve.
He's not holding back, claiming the whole system is unconstitutional.
What does that mean for everyday Americans?
Let's dig into his compelling insights.
What is the core issue here?
Paul sees the Fed as the root of many economic problems.
And how is that connected to current inflation?
He connects rising prices to the Fed's unchecked power.
How does Paul view the accountability of the Fed?
He firmly believes the Fed operates above the law.
That could be dangerous, right?
Absolutely. It's a recipe for disaster in the making.
What does gold's rise signify in this context?
Paul sees it as a critical hedge against inflation.
Is there potential for even higher prices?
He predicts gold could double or triple in value soon.
Will we see a collapse if changes are not made?
Paul warns that it's likely, especially if public discontent grows.
What might trigger this?
An economic event or continued reckless fiscal policies.
What's the takeaway for viewers?
A call for change in financial governance.
Stay informed and prepared.
Absolutely. Knowledge is power when it comes to finance.
Coming up next, insights from Michael Green on where will stocks go under Trump. Watch Passive Capital Flows for a deeper dive. What type of economy does Trump inherit?
Michael Green suggests it's a sharply divided landscape.
Why is that divide so critical right now?
Let's unpack that as we explore the nuances.
What does this mean for regular citizens?
It indicates massive shifts in consumer behavior.
Could this lead to economic instability?
Potentially, yes. It's a bit concerning.
Green argues that passive investing distorts actual valuations.
Exactly. It raises stocks regardless of company performance.
What does that mean for investors?
It suggests a bubble risk lurking.
Where does China fit into this puzzle?
Green believes China's challenges could hit U.S. consumers hard.
So higher tariffs could backfire.
Absolutely. Consumers could pay the price.
What can we expect from Trump's plans?
Short-term pain for potential long-term gain.
Investors seem apprehensive about change.
And they should be, given the volatility.
Could we see a recession soon?
Yes, Green warns it's a likely possibility.
And how should investors prepare?
By diversifying and assessing risk in portfolios.
What's the takeaway for investors?
Focus on both community impact and personal wealth.
So financial education is key.
Absolutely. Understanding is critical for navigating uncertainty.
We'd love to hear your thoughts. Comment below.
Engaging with this community helps us all grow together.
What an incredible discussion we've had today, with such a powerhouse lineup.
Absolutely. Michael, Dr. Paul, Gary, Jeff, and George all brought fascinating perspectives.
Right. They all seem to agree on the importance of understanding fiscal policies and their impact.
But it's intriguing how they disagree on the level of risk posed by the Fed's behaviors.
Yes, and let's not forget the contrasting views on gold's potential rise or fall.
Exactly. That just highlights the complexities of today's financial landscape.
If viewers found this conversation enlightening, make sure to give it a thumbs up.
And subscribe for more insightful discussions that could shape your financial perspectives.
Thanks for joining us today. Don't miss out on our other videos for more rich insights.